So the answer to the first question is, oh, do we always run late? And that answer is yes. So what can we do?
Fashionably late.
It's New York, and we'd rather get everything in than be on time. So anyway, I'm Marty Sakata. This is second day of the Ivy Family Office forum, discussing many topics. And I am looking forward to today. Just to give you a quick background, we started a group more than 20 years ago, and we have covered a variety of topics. We've had more than 5,000 speakers, some of the leading hedge funds, venture capital firms, private equity firms, real estate firms, and entrepreneurs in the world. So quick timetable: in 2008, we were heavily into hedge funds. In 2009, we got into secondaries in a big way. Got into single family homes in 2013. 2014, moved into crypto. So we covered a lot of stuff. At one point, we had a few hundred investors in Pantera, and always looking for deals, looking for new things. Did a lot of healthcare as well. We followed kind of the trends in the family office space, set some of them as well, and it's always been a great time. We've had more than 6,000 people at our dinner parties. I think we added 60 yesterday, and again, trying to build up collegiality and share ideas and information. As you know, so what kind of set the groundwork for our group was the fact that many of the family offices we knew back in the early 2000s felt that they were not getting great information and knowledge from wirehouses and other people who were servicing them. And they said, is there any way we can disintermediate this stuff, have deals come to us directly, have information come to us directly, instead of listening to a broker who's trying to sell me, energy in Texas, bring a guy from Texas over, et cetera. And so we've been very fortunate to be able to make that happen. And we have a great list of speakers today. We're going to talk about it. And again, we're going to have some fantastic speakers, starting with Shaq Manning from DARPA, but not just Shaq, but Randy Cohen, who's a professor at Harvard University, runs PEO Partners, which is a liquid private equity firm. We'll be speaking, talking about what's going on in the credit markets. I mean, we've covered a lot of macro this entire year because of where things are economically. And Randy's going to talk about credit markets. At the end of the day, we have Michael Oliver, who runs Momentum Structural Analysis. He's really a fantastic technical fundamentals analyst, and he'll be talking about where he sees the markets going as well. And we always think, in chaos, there's opportunity. And so some people will be talking about where they see the greatest opportunities today. So before we get started, again, I just want to turn it over to Peter from Polsonelli. He'll tell us all about what they do, his practice, and the breadth and scope of what they do. It's a fast-growing law firm. Maybe you can talk about how many lawyers they had 20 years ago and how many lawyers you have today. So
yeah. Good morning, everyone. First and foremost, I want to thank Marty. We've known each other for a number of years, and this is the third event I've hosted for him. So Marty does a great job. We had a great first day yesterday, and then we had a nice dinner last night across the street. I think we were expecting 30 people, but because Marty's so popular and so nice, we actually had around 60 people, yeah. and it was a fun night. One thing I want to clear up in a funny way, I've had a few people come up to me and they say they think I'm an investment banker because I see so many deals, and I enjoy talking about deal flow, and I really enjoy hanging out with people like Marty. My expertise is really as an IP or a patent attorney, because that's what I've been doing for about 25 years. But as I mentioned, I started hosting these family office investor meetings because I enjoy hanging out with people like Marty and others. But without capital, a company can't survive, can't get started. So as valuable and as important as innovation and IP is, if you don't have capital, you don't have those connections with family offices, the VCs, private equity, sovereign wealth funds, you don't have a company. So I started hosting meetings with that in mind and fell in love with capital flow and where it's going. And I try to, what I help with the startups is I try to connect them to family offices and other investors, especially at lower valuations or wherever they are on the chain. And then I try to connect the family offices, which are these days really global in nature, and there seems to be millions of them, to good deal flow. And that's what I focus on the IP. But when people bring us in for handling corporate, setting up C Corp in Delaware traditionally, operating agreements, when we do venture capital, bringing in money, and we deal with the convertible debt, the equity deals, the safe agreements. We bring in teams of people to do that. As Marty said yesterday, I'm a big basketball fan, so I like to consider myself a point guard in some deals, even though my dribbling is generally kind of weak, you know. A quick example of a company, if anybody goes to Las Vegas, there's an area off the strip called Lost Spirits Distillery. And the gentlemen, they've been a client for years. We handle their IP, we handle their real estate, we handle their corporate, and they're in the Series A fund. We've got a number of patents on aging spirits technology where you can put rum and other things in a barrel for 30 years. They have lighting and heating technology to increase that to where what takes 30 years now takes 6 weeks. So they're making $10 million a year. The gentleman has an amusement park background. So they've actually done this immersive experience. Anybody that's interested in that kind of deal, it's one of many that I see. So it's exciting for me to help them and see the company grow from literally just a few $100,000 to $1 million to now 10 million onto the Series A, and they're going to be expanding around the United States. As I also mentioned yesterday, I had the great honor to be in the military. So through those connections in the venture space, I got the opportunity to meet Shaq, who's going to be speaking next. And it's, you know, I just love the country, and with national security so important, if I could help the country get great technology that I see out there, whether it's from Eric Daimler, who's going to be speaking later, or others, then that's really a goal of mine. So I'm really excited for that. Then I have just one shout out to Mr. Zaki, is joining us this morning. He's former in politics and in the government of the Maldives, which we all want to celebrate, have successful exits and visit one day. So he's here with us for a few hours and for meetings at the United Nations. He was a former cabinet minister in the Maldives, and I had the pleasure of meeting him the other day and asked him to come by the meeting. So welcome, Mr. Zaki.
Fantastic. So, and Peter brought up two other things I want to cover are that, so when we started, there was about 5,000 family offices in the United States. Today, there's more than 20,000 estimated. So it's been a high growth area. That's in 20 years. So just look at how the stock market has increased since 20 years ago. So there's been that growth. Another thing also that happened is that somebody said that they went to a family office yesterday and said, "Are you selling or buying deals?" And the family office said, "I'm doing neither." Right. So a lot of family offices, they're kind of on autopilot with what they're doing with their investments. They've got trusted advisors, et cetera. And some don't do deals at all. I mean, but many of them are looking to invest in funds. They'll invest in hedge funds, private equity funds. They don't want to do anything direct. It's too complicated. It's too cumbersome. There's actually a group in Palm Beach, a group of about 35 family offices. All they do is invest in either funds or real estate, right? So, and as real estate is probably, with the plurality of family offices, the largest investment that they'll ever have. And with the majority of it, they typically have, you know, some significant real estate holdings. So sometimes it's deals, sometimes it's real estate. A lot of times it's just, and it all depends on, you know, what the favorability of it is also. As well as another person brought up the point that, you know, why don't all the family offices do the same thing they did 5 years ago? And the reality, it's a moving target. Everybody changes what their perspective is. I had a family office once that was running a fund of funds. They had about a couple $100 million in it. And the guy woke up one morning and saw that one of his rivals was on the front page of Time magazine for his ESG thing. He said, "Darn it, I'm going to do everything ESG from now on." So he got rid of the fund of funds and created an ESG fund of funds. So, you know, that's just the way of the world. Things happen that way. So finally, we're going to be in San Francisco, October 4th. We'll be with Morrison Forster. October 25th, we're going to be over at Coleman in Dallas. November 28th, 29th, we'll be with Fiduciary Trust in Miami for Art Basel. I think everybody should come to Art Basel. I'm inviting you all. It's really a fantastic event. We do it every year for 15 years, and it just keeps on growing. And we had 2 dinner parties last year. It was great. New York, we'll be back December 13th and 14th. We'll be in Midtown. And then we're back in San Francisco for JP Morgan Healthcare Week. I know a couple of guys go every year to JP Morgan Healthcare Week. It's always a great time. And, you know, hopefully we'll be able to roll back to what things were like in 2019 in San Francisco. And you'll see, you know, every door in the, you know, downtown San Francisco area will have some kind of a mixer going on. to talk about, you know, healthcare deals, et cetera. It's just a great place to be. So with that, we're going to get started. I know we're running late.